Hey everybody, Chris Pulver here with the Pulver Report quick segment, and today let's talk about one word. You're seeing it all over the media: inflation. How is it affecting the financial markets, the stock market, the currency market, your crypto holdings, or NFTs? Is inflation affecting your purchasing power? Will it affect your savings? What can you do to stay ahead of inflation and benefit from interest rate arbitrage? Fancy word, right? All that and more on today's Pulver Report. Hey there, just the two of us, hanging out, holidays fast approaching. You know what that means? Time to just relax, enjoy the holidays, and wait, let's get ready for it. Holiday trading! November and December are historically the most bullish months in stock market history, and we are dealing with an anti-sell, low volume, fear of missing out drift that follows the path of least resistance. And as long as the US indices continue to head higher, even slowly, risk appetite will likely prevail. Now, if you'd like to learn more about risk appetite versus risk aversion, or risk on versus risk off, be sure to check out my Lesson 6 in my Keep It Seriously Simple video series. Now, from the technical side, are we overbought right now? Yes. Are we showing divergence? Yes. Have we priced in optimism? Yes. Is this as good as it gets? No. Despite the sheer euphoria and this manic buying that's creating widespread supply chain bottlenecks, consumers are still consuming and doing it on a massive scale. Consumers know that increased costs, rising inflation concerns, labor shortages, delivery timelines are all disrupted, yet people be shopping. This is a true story. A friend of mine wanted to buy a car with straight cash. Didn't want to finance it, didn't have a trade-in, just wanted to buy a car. Guess what? He was turned down by the dealership. Why? Because dealerships are making more money right now flipping used cars or lightly used cars, marking them up for prices now. If people want cars now, you're going to pay more, right? Or they're going to make more money in financing over the next 3 to 5 years. So sure, you can go on your phone, you can go online, you can build that Tesla, but good luck getting one within 6 to 8 months. Or you can buy one that's 1 year old, 2 years old, 5 years old, and it's still 90 to 100% of what you actually paid for it, right? Good luck finding the Xbox Series X or the PS5 in time for Christmas. So here's what we need to pay attention to. Manic consumerism is driving demand. It's driving commodities higher. It's driving materials higher. It's driving risk appetite higher. Oil, copper, semiconductors, chips, steel, coal. Look at some of these trends. They are savage trends. These rallies will lead eventually to corrections and some crashes. And at some point, because financial markets have this amazing way of finding equilibrium, the laws of supply and demand have a pretty flawless track record. I pointed out in another video that markets can remain irrational longer than investors can remain solvent. So don't call the top, don't call the bottom, enjoy the rally, trade bull flags, participate and ride the trend, and look for confirmations of the top and bottom first before you're going to take that bold opposite stance. So let's talk about another component of these markets: sentiment. Again, I highlighted this discussion in a recent video of mine, why the markets move. And in the Forex market, this is coming from IG Markets and the IG Sentiment Report, 74% of retail clients are net short the Aussie yen. Now, with the retail sentiment short, with the big retail crowd short, my experience tells me that there's more upside to this trade. And so I'm not interested in calling the top right now. If we see a holiday rally, I'm looking for a round number at 90. 90.00. Now, right now we're trading around 86 or below. So we're looking at about 400 pips to drift to the upside. And this is the type of setup that we talk about in my Flex trading room in vivid details, and traders in my Flex trading room know my stance on the Japanese yen. Now, if you're interested in trading with me live Tuesday, Wednesday, and Thursday, check out the link in the description for my Flex trading room. Another thing we've been talking about at length is monetary policy and this monetary policy divergence. This means that we have major central banks that are either dovish or they're hawkish. All right? We have some banks that are looking to raise interest rates, others looking to stay lower for longer. Now, some of these measurements are coming from more positive economic outlooks, a positive recovery post-COVID. We're looking at employment numbers, GDP numbers, CPI, spending data, all looking on the upside. And so I want to break it down based on hawkish or dovish. And honestly, a lot of the banks right now are falling into some neutral territory. So The RBNZ, the Reserve Bank of New Zealand, is neutral to hawkish. They're one of the only central banks that actually raised rates in 2021. Bank of Canada, neutral to hawkish, discussing raising rates. Swiss National Bank, you guessed it, neutral. RBA, neutral to dovish, but with inflation measures going crazy, the RBA is actually talking about raising rates not until 2024, but they just recently scaled it back to say that 2023 might be appropriate. The Bank of England, I would say as a central bank, they are neutral, but they're discussing rate hikes to combat the inflation in the medium term. Now the Fed, US central bank, neutral, discussing tapering, scaling back asset purchases, okay, but not explicitly wanting to raise rates until the end of 2022. Bank of Japan continues to be neutral to dovish, maintaining that 0 to negative interest rate territory, and probably will stay that way for the foreseeable future. The ECB, the European Central Bank, lower for longer, maintaining 0% cash rate with negative deposit rates. So I just rattled off all the major central banks. Hawkish, neutral to dovish, they fall somewhere on that spectrum. Now, the comments, the narratives, the statements are all over the place. Now, we're not necessarily seeing the same agreed upon monetary policy, so we're seeing this divergence. And whether inflation is real, inflation is transitory, the bottom line is things are more expensive. Now, I realize that household wealth is as high as it's ever been, but I 100% do not believe that everybody's seeing the same benefits. Life is more expensive, so we have to find ways to generate more of it, it being money, or we need to find ways to live cheaper. Now, what does this all mean for you? Things are more expensive. Supply chain bottlenecks and issues will continue, but it's not stopping this pent-up demand. Humans are aggro buying everything from cars to houses to cryptos to NFTs, art, collectibles, stocks. Right now we have this interesting mix coming from massive fund managers out there and investment banks. 50% of the clients are aggressively buying everything they can, while the other 50% are waiting for a correction, waiting for another fire sale like we had back in March of 2020. So for right now, here's one of my favorite plays for Q4 2021. It's long the New Zealand yen, long the Aussie yen, long the dollar yen, and in late December or mid-January 2022, I'm looking for a healthy rebalancing and equilibrium. If you look at the charts in these pairs, they already look high. They already look a bit overstretched. But given the Forex retail sentiment's commitment to being short and calling a top, I think there's a bit more pain to the upside. So I will look to benefit from that pain and ride the stock rally out, ride the transitory inflation out, ride the risk appetite out, and try to finish Q4 as strong as possible. Now, of course, there's never a guarantee here, but there's never a dull moment in the financial markets, and there's never a bad time to learn how to trade. Now, if you like my help, let me know. If this video was informative, if it helped you clarify some of the market noise and explain what's going on with all this crazy stuff and buying and what's inflation, how does it affect me? If you like this information, please give me a thumbs up in the video, click that like button for me. And if you'd like to trade live with me, type in this, Trade with Chris. Type in that comment for me and check out the link in the description of this video for the Flex Trading Room or the Equities on Demand Trading Room. And one final note, I hope you're enjoying the Pulver Report. Please be sure that you're subscribed to my Pulver Report newsletter, www.pulverreport.com. On Mondays and Fridays, we're not only live together, but I'm also sending my top picks and recaps for the trading week in multiple markets. Stocks, options, Forex, cryptos. Don't miss out. It's absolutely free. You can sign up at the website, pulverreport.com. So that'll do it for today's Pulver Report segment. As always, thanks for watching. Trade to be profitable, not perfect. And I'll see you in the trenches. Bye-bye for now.